of course, can we put all these downgrades down to the rapaciousness of the pathogen there in India?
Absolutely, Rish. It seems to be a rush to downgrade growth prospects after the deepest quarterly contraction of nearly 24% in the April to June period, and as you said, the recent surge in virus cases. Now, the rise past 5 million cases in virus cases and the localized lockdowns means India will take longer to recover from that contraction. And while some of the recent data from PMIs to gasoline sales point to a stabilization in activity, the central bank governor warned this week that the recovery will be gradual as more virus cases grow. What that means for an economy which just grew at over 8% in the past just 3 years ago is that it's now staring at its deepest economic contraction in history, putting millions of jobs at risk. Not just that, billions of investments are being put off as companies and businesses brace for huge losses in both demand and profitability. In a nutshell, a double-digit historic contraction is more likely than not for Asia's third largest economy. Vish?
Yeah. And also, Anirban, it's Juliet here in Singapore, we're kind of seeing this policymaker support, which has really underpinned a lot of economies and markets over 2020. But how much more can policymakers do here to support the Indian economy?
Julie, the government needs to step up very quickly here. Now, the bulk of the support has come from the central bank, which has cut rates by 115 basis points and pumped billions. But it has said that fiscal stimulus is also needed. But this government has been rather conservative with its spending plan. It is worried that a widening fiscal deficit will lead to ratings downgrade to junk, and that will be extremely embarrassing in a year when it plans to open up the bond market to foreigners and be included in the lucrative global bond indices. Already, we see that the fiscal deficit has shot beyond the budgeted target, and the options are there from deficit financing to universal basic income schemes to support the economy. Whether the government will bite the bullet and take these radical measures is something we have to wait for. But this is an extraordinary situation and will need extraordinary measures. Julia?
Yeah, and that extraordinary measures means what does it, I guess it mean for India's long-term growth outlook here as well?
Well, as Rich said, it's pretty bleak. The 7 to 8% growth that investors were getting used to see is probably a distant past. Now, banks are struggling with a huge pile of bad loans, and companies are busy deleveraging. And after the virus has struck, household balance sheets are under stress. So it's a triple whammy, which has huge implications for investments and demand. Banks are risk-averse and not lending. Companies are not investing and rather shedding jobs. All this means that the widening of the output gap and will make India's recovery a rather long-winded one. And with limited government support, the Prime Minister's dream of a 5 trillion economy in 5 years might just remain that.